Corn School is brought to you by BASF and Pride Seeds.
Bern Tobin here on the Corn School. Today I'm joined by Matthew Pott from Grain Perspectives, and we're going to talk a little bit about the corn market in 2018. Hey sir, thanks for taking the time.
You're welcome. Thank you.
Let's start in Ontario. Obviously, looking back, we've had a pretty sideways market for 2016, 2017. Probably wouldn't like to see more of this in 2018, but we'll talk about that in a second. But let's go back to Ontario. Almost a record crop here this year. Numbers are being thrown around, 168 bushels per acre. What does that mean going forward from a price perspective?
It's an interesting scenario this year as far as corn acres. Like if you ask the majority of agronomists this spring where corn acres would be given the weather, would be under 2 million. StatsCan saying we're over 2 million, and that's probably more or less accurate. Looking at corn yields, 161 to 162 this spring was considered way out of lunch. Now StatsCan's estimating between 165, 170. Wouldn't look too much into that, but this corn crop's bigger than what we thought. The long story short about it is that we're not going to have a shortage of corn this year, meaning our import basis will probably never come around, even potentially at the end of the summer, which is usually the time that we'd see some strength. So we'll see what happens. But right now, the basis side of things, there's no real reason, unless the Canadian dollar does something, to see a lot of action there for the time being anyways.
Let's talk about sticking with Ontario. Last couple of weeks we heard an announcement that the Ontario government is going to move from an ethanol perspective from a 5% mandate to the 10% mandate. Probably not going to see a big price, push right away, but what does that mean, I guess, a little longer term?
Well, in order to really make a difference on our corn basis here, we're going to have to see continued investment into the ethanol sector, and that will be the push. And when you look at the way markets respond to these type of situations with ethanol, like even the big one back in 2007, 2008, when the ethanol mandate in the US, market didn't respond instantaneously by any means. It was still that same buyers and sellers market, maybe a little bit of speculation in there, but we didn't see that big run until the demand was actually proven, and that's where we saw more strength. When it comes down to this type of thing, as far as basis is concerned, we're going to have to see that actual demand in order to really make a difference on it.
Now, speaking of demand, I mean, when you look at global supplies, we have huge supplies. We're going to need some demand to pull that through. Do you see something in 2018 that sort of gives you some hope that there's going to be some pull through?
I think when it comes down to our big supplies, we're probably stuck here for the time being until we get some sort of supply concern. You can argue with China. China holds a lot of corn, big producer of corn. That 2020 ethanol thing, it goes back to that same conversation before. We're not going to respond instantaneous to this. And China in itself has lots of questions about how much corn they actually have, etc. When it comes down to those big black swans, we're probably going to be looking at some sort of weather story again. But what to watch for on these weather stories this summer, this spring, or what have you, is the fact that we're sitting on the backs of a big carryout, which means just like we saw last year with nearby futures hitting 450, the previous 2 years, this year only hitting 410 in the weather market, that volatility decreases with this type of supply that the U.S. is sitting on. U.S. ethanol demand strong right now. The USDA just raised it, but these are small changes compared to the fact about just how big the carryout in the US is right now, which doesn't paint a story that's any different than right now. But I will say this, if we get to the situation where the corn market finds support, which it's shown in the last few days, with the funds position where they're at, they're going to continue to unwind their short position potentially, and in that type of scenario we could see more support in the corn market, a little bit of strength if there's a reason to do that, and no news is almost good news for the funds to take some profit ahead of the spring. If we see that seasonally, we should expect some strength too, but what to really watch for is this volatility is going to be relatively narrow, and I can't see corn being much different unless we do get that unknown black swan. But you tell me what that is.
Well, you and I wouldn't be doing this interview if we knew.
Right.
Hey, let's talk about some shifting dynamics here in the paradigm. I mean, like corn has always been king, but we're seeing reports now that soybeans are going to nudge ahead of them in 2018. What does that mean for pricing and obviously the structure of the market moving forward?
It's going to be interesting to me to see what that means to pricing, right? We can talk ratios, corn soybean ratios all we want. When we saw last year, doesn't always follow perfectly, right? I'm sure there are going to be some acre wars as we get towards this spring and planting, but realistically what we're seeing is when it comes down to corn demand globally, without ethanol being a big pusher, there's only so much that we can have demand-wise. Soybeans is taking the demand space right now. 91 million acres is what the USDA expects for both soybeans and corn this year. And in fact, over the next 10 years, we should see more soybean than corn acres, which will be an interesting change in the long run. But what we really need in the corn market right now is a significant year of reduced production in order to really see this thing take off, at least on the future side of things. So
let's wrap this up. In the near term, we're in December. Anything, some key factors, some key points of the market that farmers should be zeroing in on in the months ahead?
I think when it comes down to this type of corn market, especially with corn having its own questions too, as far as what happens as we roll contracts into the next one, do we start to lose some strength there? Take advantage of any carry opportunities with any rally and try and get those good prices and think profit in this type of environment. The volatility is going to be low, and whenever we get a chance on any spikes on basis or good premiums, I think it's that simple that we just take advantage of any profitable prices right now. Again, I'll finish with the fact volatility, more or less without a big event, is going to be narrow.
Well, Matt, hey, hope 2018 is more interesting than the last 2 years on the positive side.
Yeah.
We'll wait and see. Hey, thanks for stopping by.
Thank you.